Welcome to another episode of the Living Beyond the Numbers podcast. I'm your host, Jude Boudreaux, and I'm really excited to have one of my partners at the Planning Center here with us today. We've got Caleb Arringdale.
Hello, nice to be here.
Yeah, and I think I blew your last name. I never know if
It was very close. Arringdale, that's fine. I respond to anything.
Yeah, I know, but it's just very Arringdale in my head.
Exactly.
So, yeah.
No one knew what my last name was about at all until Frozen came out, and then everyone said, "Wait, Arringdale? Are you Norwegian?" It's like, well, actually, yes, I am. And then it just clicked for everyone.
Oh, okay. Well, it explains lots of things now. So I got it. Great. Well, Caleb, why don't you tell us a little more just kind of about your role here at the Planning Center?
Yeah, I've been here about 5 years, joined in July of 2020, so very early pandemic. So it was a pretty fun time to get started here. There's obviously a lot of changes going on. But yeah, I'm on the tax team. So we work with the planners here to work on both like tax strategies for people. So we never want the tax thing to be the most important, but taxes are obviously a really important part of a financial plan. So what we do is we work with our planners to make sure every decision makes sense from a tax perspective, both for like a current year, but also for like the life of like the person and even, the life of their families in many cases when we're talking about like estate planning. So yeah, it's a good time.
Yeah, it's no, I think it's one of the exciting things about the planning process is that ability to look forward through this and not just say, well, here's the bill come April, but if we, maybe we pay a little more now to pay less over a long period of time, can sometimes be really favorable. But just the ability to go through and have that detailed analysis and work is super important to me. So what kind of brought you into like the industry? How did you get into the tax side of things in general?
Yeah, I was supposed to be an attorney. My whole life thought I'd be an attorney. And then for some reason, literally looking at want ads in newspapers, which were a thing because I'm very old, and looking at those, there were just so many jobs needed for accountants that I thought, hey, maybe I'll give this accounting thing, a shake and see what happens. Ended up graduating in the midst of the Great Recession. So great timing on that end. And so jobs were somewhat scarce, but ended up getting a job with a small CPA firm, started doing tax work, audit work, like attestation, comp work. So kind of like high level bookkeeping stuff. You kind of, what you do as a newbie accountant, started doing that, went briefly into like private accounting as a controller for a mid-sized pizza chain, actually. Had about 50 stores. It was a lot of fun, but after about a year, it was, public accounting is just so much more interesting. So got back into public accounting and then just kind of kept doing that, kept kind of churning with that until eventually pandemic hit and realized the place I was at, I liked it, needed a change. So ended up really moving to like tax specific work here at the Planning Center. So I've slowly refined from doing kind of a broad variety of accounting to get more and more niche into just taxation now.
Yeah. No, I think that's the way most of us, evolve in our careers is from that bit broad to the narrow. And and it's been really exciting to have you as part of the tax team. I think that, the ability to think about taxes holistically within the planning process is always just a huge benefit to our clients and the people that we get to work with. So I guess as we start to think about, some of those families that we get, to work with and people who are looking at their situation, this episode is really about things you can do to prepare for your tax situation or how to make it work well. So what do you think is some of the most common mistakes that clients make when they're getting ready for, the tax season? How do you help people avoid that?
Yeah. So the great thing about the Planning Center in particular is that we get to be very proactive, right? We're not waiting for clients to just bring us up at the end of the year, then say, okay, well, this is how we're going to handle that. It's like, no, our idea is that we work with people throughout the year so we know what's going on. The biggest problem is people don't tell us in all of these mid-year meetings what's going on. So many examples of this. So the client who you have just a quick meeting on April 12th to review everything before they get it signed. And then they say, oh, by the way, I have this rental property. Oh, or hey, by the way, I lost a 6-7 figure amount of money on this investment. Will that matter? Or I can go on and on with various things that have happened, but that's the biggest issue, people have is just tell us what's going on. We're here to help you. We're trying to keep the process going smoothly. If you hold details from us till the last second or forget that something's important, kind of throws things off for us and obviously can make a big impact on your taxes.
Yeah. And I I remember jokingly, sending to the tax team this, snippet last tax season of like, like people asking like, oh, do you really need that information? Like, like, no, our accountants like to ask for, extra details during the middle of tax season, without needing it. But there, chances are, we do need some level of detail. And there's some things if we ask you for it, it's probably for a tax related reason. We're always glad to explain it, but it may not be, apparent at the beginning.
Yeah, we get the issue where we'll send out emails. I'll send like a numbered bullet pointed email. So I have 3 questions, question 1, question 2, question 3, and the person will respond to the email, thanks. And I'm like, but,
Right.
come on now.
Yeah, we still need those answers here.
Yeah.
Yeah. And I think that's, I think the big advice for anybody listening to this is to, open that door and have that relationship with whoever's handling their taxes, especially, throughout the year. Right. So it's harder to have those conversations perhaps in the spring, but now mid-year, it's a great time to be talking to people about, their taxes and what do they think they want to be doing for this tax year.
Exactly.
So how do you think clients can better align some of their goals with tax strategies to, help minimize that picture over time?
Yeah, it's tricky because like all things in life, but also in taxation, the answer is it depends, right? It's always it depends. Everyone is different. Everyone has different goals. I have a client who has a significant amount of money, but it's all in IRAs. But their plan for that money is to donate it all. Like 95% of the money will be donated. For them, tax planning is completely different from someone who says, yes, my goal is to fund my children's education, my grandkids' education, or my goal is to help make this kind of future like generational wealth. My goal is to do that and pass this on to future generations. That these are obviously totally different plans. Obviously, the amount of money someone plans on leaving. Some people say, hey, I worked really hard for this money. Yeah, I'll leave a little bit for my kids, but I intend on spending most of this. Well, great. That's a very different tax strategy from, hey, I want to leave like a large inheritance for my children. Or the other one, which is strange. Someone says, yes, I have a significant amount of wealth and my children are all teachers, which, unfortunately is not a super high paid profession. So it really depends so much. But the key is the tax strategies really make a difference because in investing in financial planning, we're thinking about how do we improve things by 1%, 2%, 3%. Well, tax planning, if we can tax something at 12% instead of 22% or 24% instead of 35%, that's a huge savings right there. So our goal is to try to minimize those over the lifetime. And what your goals are really impact how we decide to do that.
Yeah. And it's so true that it's really individualized. I think it's one of the values of planning is not knowing, not just kind of looking something up on the internet and knowing the calculation, but saying, well, that's true. And here's how this would apply to your situation. If you were to make some gifts to a charitable cause or to one of your loved ones. So there's so many tools in that kit and it's always changing. I keep getting questions about, the tax laws and what's going to happen with this next tax package. And I can tell you, I have no idea what's going to happen with this next tax package. How do you all as professionals on the tax side, how do you prepare for some of those kinds of changes and get ready for, the uncertainty of what might bring?
Yeah, when we get that question, our usual response is, the crystal ball is still broken. We don't know. We can't anticipate, like on the financial side, you can't anticipate where the stock market's going to do. You can make guesses, but you don't really know. On the tax side, the same thing. We can make guesses. We can see tax laws that they'll be progressing maybe through Congress, but there's so many times there's a law that we think is going to pass and we start to plan for that. And we're sending out client communications and making just planning for this eventuality when all of a sudden last second gets vetoed, doesn't get passed, something happens and boom, goes away. So one thing we do, we try to stay really up on legislation. So we are constantly reading various tax blogs, various congressional releases on what actually might happen. And then we try to help clients adapt for that along the way. Frequently, there can be overreaction to this. Some people read everything in the news and think, oh, wow, I need to start doing this because this might happen. And so much of what we actually see in the news doesn't actually come to pass, or so often there's fine print that changes it. So maybe for a tiny subset of people, this might happen, but for the vast majority, it won't. So a lot of it is we just have to stay up and really look for that fine print so we can prepare people for what actually does happen versus what, we think might happen.
Yeah. So I think if I can think of the number of times I've been asked a question about something that a candidate said, and then what actually comes out of the package, it's
Yeah,
always completely
exactly.
different.
For sure.
Yeah, so try not to over identify with some of
Mhm.
those campaign promises because we all know how those end up.
Yeah.
Well, all right. So in terms of then like not trying to predict the future, but it's like what can you do now? So what do you think people can do now to try to help next tax season go smoother? What are simple things they can do to just prepare for that?
Like the simplest thing, besides obviously talk with your accountant. Like, we're here to help. That's obviously the best thing you can do. Keep us informed about what's going on. Besides that, I always tell people have a tax folder. Every time you get a tax doc in the mail, put it in that folder. That seems like a no-brainer, seems obvious, but doing that solves like 90% of your tax problems. The biggest issue we've actually had this year is with electronic tax docs. So more and more places are starting to charge a fee to send you paper copies. And so everyone is opting into electronic delivery, which is great. I do the same thing. But then people just get this email and it's buried with their other 10,000 emails and they never open it, they never print it. And then it's a document we never have. And that's okay sometimes because if we know we're looking for the document, we just tell the client, hey, I think you're missing this, right? But sometimes this could be the first year. It could be an unusual thing. We have no idea to ask for it. Client hasn't told us about it. And we just don't know about it. And then 6 months later, the IRS sends them a notice. Hey, you never, pay taxes on this income or reported this income. And we're like, we have no idea. And then it's try to talk to the company, search through old emails. Usually if they send them a code, that link is expired. So we have to, it's just a whole pain. So the new thing I'm telling people is all these electronic like tax docs that you get, when you see that email, stop, honestly, print the document, put that in your tax folder too, because that is how a lot of stuff is going to miss now.
Yeah, I have to say I dislike the idea of printing all those things, and yet I do this for myself because there's just so many things throughout the year of the donation to somebody's walk to raise money for charity,
Exactly.
or that investment sold, and so now we have a document, but I don't need it for another few months. But setting those things aside, maybe you've got a good digital system so you can print it to PDF and save it somewhere.
And if you do, great. Yeah.
Yeah. But yeah, keeping those things together makes a big difference and saves a lot of stress when it comes down to trying to find them in February and March.
Yeah. Yeah. If you have a good digital system, use it. Fantastic. But unfortunately, I'd say for the majority of people who don't quite have that level of system set up, yeah, just print it. It's dumb. We'd like to live in a paperless world, but honestly, it'll save you headaches down the road.
Yeah. And I've never managed to live my way into a good digital system. So as much as we'd like to think we're paperless, it still is part of our world and makes the season work well.
Yeah, exactly.
Yeah, so everybody's tax situation obviously is really individual, and so there's no blanket strategies that apply to everybody. And I'm going to ask you a question about blanket strategies. So, if there were, some things you think people, individuals and families who have higher earnings, who have maybe more wealth, that they can be looking at or talking with their tax professionals about, what do you think? Can you give a few recommendations of some of those things?
Yeah, I was thinking of just a few kind of, these blanket policies that can usually be applicable for many people. One is tax loss harvesting. And this is a great one that you usually have to do in conjunction with your financial planner, with kind of investment person. But this can be great, especially this year where investments have just been kind of nuts. There's been, obviously some huge downturns in the market, then some upswings. Whenever we have these big downturns, tax loss harvesting is great. So what that is, basically, you take like a stock, like a mutual fund, an ETF or whatever, you sell that, and then you put that money, and you sell that at a loss, right? And you think, well, hey, that's bad, right? Maybe, but not necessarily in this case. So we sell that at a loss. Then we use that money and buy a substantially similar, but different enough that the IRS approves of it, like different type of stock or different type of ETF, exchange traded fund. Then we wait our 30 days to get around some IRS rules. Then we buy it back into the original position. So functionally that money has never left the market. That money is still doing the exact same thing that it would have done. But now you've recognized some losses, some capital losses, and that will help you offset capital gains and can even help offset your normal income. And obviously, you don't want to have losses, but if you have losses in a year like this, that's great. That's a way to help realize some of those and actually, get a little tax break on these losses without actually costing you real money. So I think tax loss harvesting is a good idea, especially for those with higher wealth. It's at least something to look into. It won't apply for everyone, but certain stocks this year have been down a lot, so it could be something to look at. For younger families, childcare expenses. We're coming up onto summer, so you have all these day camps, these classes for your kids, tennis camp, whatever this might be. So that can be worth keeping some of those like the receipts for that stuff. Overnight camps don't count, so that's the kicker. But for most of these day camps, that probably qualifies. So just keep track of the information. And that's not a lot of credits get income limited, right? So if you have a really high income, you lose out on those. And this child like dependent care credit, it's somewhat limited by income, but it still exists. So even if you're higher income, it's worth keeping track of these expenses because you can at least get something. So, why not? The final thing I think I'll talk about is qualified charitable distributions for people over 70 and a half. So let's say you have to be over 70 and a half. That's the first thing. And you have to have money inside like an IRA, right? So like a traditional IRA. But if you do, and you have any like charitable goals, the best way to do those is via these qualified charitable distributions, or we call them QCDs usually.
Yeah, I think if there's people who wanted to, fund a gift to a university or a school or,
Absolutely.
or their faith community,
Mm-hmm.
can be a really powerful tool and a way
Absolutely.
to do that. And on the giving thread, I'll just add in a plug for donor advised funds. Occasionally,
Another great thing to use.
Yeah, right. Because occasionally we see people who have a lot of income, but perhaps they're not itemizing their deductions. So putting money into a donor fund lets them lump in several years worth of giving into 1 year. Even better, sometimes we can fund that with a stock that has appreciated a lot, or maybe that they received from their company, and take a deduction on that without paying any capital gains. It really makes a nice tool for us to be able to fund a tool that not only can be used to make the giving and make your tax picture work better. I love tools like that because they provide conversation starters for families,
Yeah,
right?
exactly.
So if you want to talk with your children about giving, say, we created this giving fund, and now what's a cause you care about? Can go do some research, and we'll learn about which ones work well, and then maybe we can do some giving from our family giving pool. And any of those things that help facilitate a conversation across generations, I think, is super valuable for more than the tax benefit.
Yeah, absolutely. And those DAFs, those donor advised funds, can be really useful. We've even used donor advised funds in conjunction with large Roth conversions. And so that will help you kind of ameliorate some of the tax consequence of like a big Roth conversion. So those donor advised funds can be really powerful, especially if you have highly appreciated stock. Like I think the classic example is Apple stock. You've had Apple stock. If you sell that, obviously huge capital gains. You've had this for like 20 years or whatever. But if you have charitable intent, put some of that in that donor advised fund. You don't have to pay capital gains on it. You get a deduction for the current fair market value. It's a really incredible way to do it.
Nice. Yeah. And again, just kind of another plug on the benefit of that forward-looking tax planning. Because occasionally we can add in those tools where, maybe we're going to pay more taxes on this Roth conversion now. We'll get some deductions on making some charitable contributions, and then take money that over a long time then becomes really tax advantageous for that client, for the next generation. So it becomes a very powerful tool when we add the impact of time onto some of these things.
Yeah, exactly.
I mean, thinking just kind of about like, within the firm, when we work with, some of these high income families in particular, what do you think is different about the way that we work with clients at the Planning Center that you find is valuable, especially compared to maybe some of your other industry experience?
Yeah, we use the word a lot, but it's because it's true, like proactive. We are constantly meeting with clients and working with them on their issues. I've worked with, when I was just in, the public accounting world, we worked with a lot of financial planners, or, well, they call themselves financial planners, but really just investment guys. And they would meet with clients maybe once a year, maybe once every couple of years. They would, slap them on the back and say, everything's looking great, Bob. And that was the extent of their relationship. And for that got, their really high, fee from them, which honestly, the clients never even knew how much they were paying because it was all so buried in minutia. Whereas we have the totally different approach. So we're meeting with clients 3-4 times a year, even more sometimes when they have like a special needs. We are looking at so many different factors of their life, helping them plan, right? Not just managing investments, but really helping them plan for their future, their kids' future. And the fact that we're meeting with clients so often helps us to develop a relationship with them, which helps us help them even better. So I think the biggest difference is that we actually have like solid FaceTime with clients. It's not just in the accounting world, you see clients once a year, tax season, right? That's the only time you're usually seeing these clients. And maybe you might have a phone conversation mid-year, sometimes you do a projection, but that was usually about it. Whereas here it's completely different. We really have time to make a solid plan. And for us, just for like the tax benefit of that is that by the time we get to tax season, the tax return's not that hard because we know exactly what happened. We have anything difficult already mapped out. Come tax season, we're just plugging in numbers. So that's not hard. We've done all the hard work beforehand. And so it really helps the clients when we can do that.
Yeah. Oh, fantastic. All right. Well, I'm going to pivot over to a couple of rapid fire questions as we work on kind of wrapping these podcasts up and bringing them all together. So, all right. Important question. What's your favorite animal?
So it's probably a monkey, although it might be actually the ring-toed sloth. I read a fact about sloths that I just enjoy so much that they're so slow they grow moss on them, which we all know, I think. But I think that's a delightful thing about sloths. But also, they're not the world's smartest creature. In fact, they'll sometimes in the forest, they'll grab onto their own arms thinking they're tree branches and then like fall and have to catch onto something else. And yet somehow they're still alive and they look so happy. So, I got to give it up for the ring-tailed sloth. Big fan.
Yeah. Oh, I love that. I think we probably all have our ways where we think we're grabbing onto something else, but it's really ourselves and falling.
Exactly. And they seem so happy. So yeah, hey, good on them.
Oh, totally. All right. So what is it always worth spending more money on?
The classic examples are like beds and shoes, anything you're obviously using a lot. The other thing, honestly, I think food, like quality food can make such a difference in your life. It doesn't have to be super expensive, but just buying good stuff will just make you feel better.
Yeah. Nice. Best money you've ever spent?
Probably it's either experiences or honestly, like the car we just got. I actually really like it. It's the first car I've ever bought because I wanted it, and it's fantastic. Big fan.
Yeah. Hey, I tell clients all the time, like spend on the things that you enjoy. And so that is great.
I'm not even a huge car guy, but it's just I'm traveling a lot, and traveling much more comfortably than I was before has made a world of difference. So it's been great.
I can hear that. All right. So tell me about the last achievement you celebrated and what was it?
End of tax season. That's always a big achievement. April 15th comes around. We close up the office around 4, go get food and drinks and kind of chill. I celebrated the next day by grabbing brunch, having some mimosas and sitting on the couch and reading for the rest of the day. So it was pretty great. Nice.
Yeah. I don't think a lot of industries have that same pressure day, that it's such a final thing. Like in our world, December 31st rolls around and there's things that have to happen by then, but not all of our clients have to. But by April 15th, everybody has to do something, and it's a real jam.
Yeah, absolutely. Yeah. And every year taxes get more complicated, but that just means that custodians and other companies who send out required tax documentation, they are also get delayed. So every year, the time frame we actually have to finish everything gets slightly compressed, even by a couple of days.
Yeah, and we see that. And then companies send revised forms, and then you got to update it all again.
Exactly.
All right. So travel, favorite place to visit?
Inside the U.S., probably Jenny Lake in the Grand Tetons. Absolutely stunningly beautiful. Big fan.
Nice. Awesome. And dream trip you haven't done?
The biggest dream trip is to Antarctica. Like that seems like a bit of a crazy trip, but the whole idea would be go down to go down Argentina, work our way through there, and then to Antarctica. Although my wife says there's absolutely no ways to doing that, but I have a cousin who said he'd do it with me, so that'd be cool.
Nice. Yeah, all you need is one companion.
Exactly.
No, I think I mentioned this to you the other day. Every time I sit down to write a goals list, the first two are always 50 states, 7 continents. So I'm with you on that one. All right. Well, one last question. So if you had to go buy some happiness, what would you buy and how much would it cost?
I'm a geek from way back, so for me, if I'm truly just buying happiness, it's computer parts. So that means going to Tiger Direct and buying motherboards, graphics cards. A couple $1,000. You can, $2,000-$3,000 can go pretty quick on that. I do this very infrequently, but when I get to do it, it's very exciting for me.
Nice. Yeah. Again, like about what you love, right? It's not. Yeah.
Yeah, and otherwise it's experiences like a new trip, a new place, something to do. I'm a big fan of experiences, but true happiness is is pressing buy on a brand new video card.
I love that. Well, great, Caleb. Well, thanks for sharing some time with us this afternoon. Really enjoyed the conversation. I hope that our listeners found it valuable too. So for those of you who are listeners out there, please like and subscribe. Send a comment to us. I'd love to hear your feedback on the podcast. I'm Jude at theplanningscenter.com. And you can reach Caleb at theplanningscenter.com. The podcast episodes will be hosted at theplanningscenter.com/pod. So you can go there to find show notes and any other details or things that you might want to get in touch with us. So thanks again for listening this afternoon to the Living Beyond the Numbers podcast, and hope you have a great rest of your day.